Oh, what's up, OG? You whole fat one last night?
What's up, buddy?
You have a good night?
Yeah, you?
Yeah, it was nice. Had a few beers, had some food, had a burger, some ahi tuna nachos, which is pretty tasty. Pretty chill. Passed out.
All
How about yourself?
right. I just chilled at home. The wife, watched some
Nice.
TV.
Nice. You got any shows you're watching?
You know what? We were watching that. We were big Dexter fans when it first came out and all that stuff, and we watched all this. You know Dexter, right? You
Uh-huh.
know what? Yeah, yeah. So now they have like the original Sin. Like the prequel for all the Dexters. I guess.
Yeah.
When he was a kid growing up. So yeah, we just watched that yesterday. Yeah,
Nice.
yeah, pretty cool.
Good job on the week of trading.
Thanks, brother. I told my wife that I was like, you know what? I saw some trades that it's funny that they wound up, you know, moving towards the direction that we wanted it to move, and but I was just the conviction wasn't there to take them, you know.
That's exactly what you need. Yeah, I mean, there's a oh, just like not just in trading, but like in life in general. There's a
Hmm.
there's this saying in this and it's not I don't know if it's a religion actually, but it's a philosophy based on how you interact with the world around you, right? And I think it's called like Kabbalah, not Cabal, like the evil people, but like Kabbalah. It's like I think it's like an Indian or a I don't remember exactly let me check where it comes from, but they have like Kabh. Yeah, it's a Jewish mystical practice.
Hmm.
Basically, it says it explores like the nature of the universe and like how to interact and stuff. And what's interesting is that because I studied like a bunch of different religions just for just for like to like understand like you know um you know Catholic, Christian, all these religions that I've studied too, but find it interesting like they all are, kind of driving home the same point. But what was interesting about this particular one is um they talk about like the the importance of certainty. Like
Hmm.
you want to have like not just like uh you know like blind confidence, but like certainty beyond logic in what you're doing, right? In life and how important that is. And if you think about it, like for example, this guy that I do consulting with, right? I'm about to quit my job. I work part time for him, and I don't even go in the office. But he literally, you talk to him, and it's like what is this guy smoking? Like, how is that even attainable? But he has this like certainty behind what he's doing, and it's like it doesn't even seem logical. And if you look at, for example, the market, right? As you're a trader in the market, you know you have to have that certainty behind your trade plan, because if you don't, you sell too early. And then all of a sudden what happens is, a week later, you're like, shit, I just bought those contracts at $80 a piece and now they're 1,200. You know what I mean?
Yeah.
Like, how many times does that happen, right? And I'll go over Baba right now, actually, because that's a perfect example. Baba, we were in this baby way back here, right? And we knew Let's go to the dollar, the daily. So we were in here at 85 to 86, right? And we knew it was going to test this upper range, right? And we traded them multiple times, right? And we made hundreds of percent multiple times. But here's the thing. If we knew, like, with certainty, which we had certainty, but we didn't know exactly what time it was going to reach it, right? If we knew that it was going to test this mid-range at 100, why would we sell our March calls?
Right.
You know what I'm saying? Like, and that's the certainty beyond logic, right? Because your logic is like, it's telling you like, oh my God, OG, you're up 100% on your BABA calls. You better lock that in, right?
Mm-hmm.
Like that's logic, right? Oh my God, I'm making a lot of money. I should do that. Logic is saying don't risk it. However, if you have certainty beyond your logic, like more certainty that it is gonna fucking go there and it will hit this 103 mark, the certainty has to be stronger than your logic. So you hold it. And as long as you define your risk, you're like, well, you know what? I'll just set my stop at even and I'm holding until it hits this target, 102, 103. You never would have got out. Your logic would never have pulled you off the trade, right?
Right.
And that's what like is like so important. Tesla too is a good example. The day trade that we did for Thursday. I mean, I could go on and on and on. I mean, well, here's another example. I still need to pull up MSTR. So people don't know this, except, but I had the 330 calls, and I was down about $1,000 on them, almost $1,000, bro. And I'm like, that's like almost 70, no, like 60%. I was down on my calls, and that's why I wasn't alerting them. Is because I'm like, well, fuck, they just hit the 520 or the 320 puts, so. And I'm like, there's no way it doesn't break out. There's $65 million sitting in calls, and they have not trimmed. Why would they drop this fucker? No way. So I'm like, well, they could. So now here's my logic coming in. Well, they could. They just hit 0 DTE 520s. Well, but then and then I'm thinking, well, on the other side, I'm like, well, they've got 65 million, and we're sitting here with an inverse head and shoulders, beautiful textbook inverse head and shoulders in a pinch near an FV, an apex of an FV. Like the thing's gonna break. And then looking at the volume, I'm like, if I've been analyzing the daily volume like a lot on this, and looking at the daily volume, like you can see as they bring this thing down, like you see this, how it's slowing, the momentum slowing. You have doji, sell, buy, doji, right? And then as these last few days, it's buying. They're buying this up. If you look at the this daily volume here, you can see that's all buys the last 2 days. So I'm looking at this, with all this like logically, right? But I still, thinking like, oh my God, you're down a lot. I'm down. Like this is not good. Like typically I stop out. But I was like, no fucking way. This thing's going up. And I just waited. And then I was sitting there in the trade. And here's more logic. They had a fucking they had a sell order block right here. That's why I said on voice, I was like, hey guys, I go, you can take it long, MSTR long, 445 345 calls, as long as it holds 331. Right? And I was in, where was I in? Thursday, Friday. I was in right in here. Right here. And so it popped up and I was up 60%. I didn't fucking sell. And then it came down and I'm fucking down 50% on them. And I'm like, well, nothing's changed. They still didn't sell their fucking calls, right? And they're still holding. And then it, boom, it tested again. I'm like, well, that could be a double top. And then I'm like, no, they didn't sell, right? So here's all this like logic, like, oh, take your gains, or um, they hit this, or oh, you're down, you should stop out. I just had this like certainty beyond my logic that was telling me. I had sell blocks. We had a fucking sell block at 34. We had a sell block at 40. We had a sell block at 40. Like there was fucking sell blocks all the way up, and they just fucking pushed this fucker right up.
Yeah.
Right. And obviously it doesn't always work like that, but like what's crazy is look at the 4-hour channel. We've been watching this 4-hour channel nonstop. This tap, perfect tap right there. Up there. And look what they did. It's really, I just find this fascinating. And here's why do I have my channel like that? Oh, I know why. So this needs to be highlighted up. So there's the actual channel, right? And I have another resistance. As this thing shoots up, it's going to get stuffed right here. This thing should be highlighted a little bit more. We'll do it. Like that should provide resistance there. But to the wick, right? You zoom in, it's like that was a perfect spot to get the fuck out, because you have this trend line, and then you have this wick, this wick, this wick. Like this is like legit supply. And plus, what happened too? I was watching some people on Twitter, and they're like right here, right at 37 to 38, they're like loading calls. And maybe they caught like 100% or something. But like, and that's when you start seeing everybody start to pile in. That's when oh boy, I better get the fuck out. Right. Same thing with Dell. Dell was crazy. They got that news. Calls went like stupid. I heard. I think there was like 2, 3, 4,000%. Unbelievable. What I'm gonna do is I'm gonna start to build a filter. Hey, what's up, PB? I'm gonna build a filter for 0 DTE days. And what I'm gonna do is I'm gonna make this fucking filter so that I can find or get alerted when these things. Yeah, I'm gonna make a fucking scanner and a filter, because I have, so like when you guys are like, well, where the fuck is he finding all these? I have volume alerts in my Webull, and I've set them up. It's taken days to do this, but it's just alerts like, boom, this stock price hits this one, or the abnormal volume here, volume there, whatever it is, and I catch it, and boom, I fucking hammer it, right? And then I, obviously, but if I can build a flow alert when I see them load, because somebody knew without a doubt that this news was coming. So, in the morning, they're probably loading these calls, and I guarantee you they were probably loading, at 110, they were loading the 15s or the 14s, like heavy. Like, so knowing that, we would have caught it 100%. So, let me market tide. So unusual rails. This is my big. Is this? No, this isn't it. Shoot, go on. Let me go on my other side of the screen. Is there anything anybody wants me to cover specifically today? Because I'm going to go over some fun stuff. Okay, so I'll build that out. Unusually bullish, ticker scanner. Okay, all right, let's get into it. So that's one thing I'm going to have to work on and figure out how to build a proper scanner. Let me just get the screenshot of the EDU. All right. All right, so let's go over the broader market. Literally going to ask you to. I have a scanner for uh, I mean I have so my flow my option flow is pretty good, like really good actually. I think I have a scanner or a flow settings that are specifically for flow or for floor traders, like on the exchange, and I have it designed so it's not it filters out all the bullshit. Meaning, I don't want to see stuff at the bid. I don't want to see things at the mid. I don't want no side. I want specific things targeted. And like, I don't want to see crosses, normals. I just want sweeps and floor trades, volume over OI, certain things like that, right? Um, and then I have another one that I call, it's called What the Flow. And this one is basically like, uh, it's like massive orders at the ask and like over 100K and with different settings too. So I've got some fun ones. All right. All right, let's get started. So let's do the weekly recap right now. And there's a couple things I want to go over about the weekly. Let's take a look at SPX first. So, anybody notice anything that just jumps out at you? It's not US 500, it's SPX. Anybody notice anything specifically? We have a doji. Yesterday we printed a fucking doji. We were unable to make a new high yesterday. It's really interesting. To me, I was like shocked. My measured move for the week, if you look at Monday to the upside, was 61.35. I was pretty confident they're going to make a new high. So I'm shocked that they didn't actually. Does this mean we're going to dump? No, it doesn't. But it does suggest that they're going to bring her down. Absolutely. So how are we going to trade this? Well, if they pop us on Monday, we'll be looking to short the shit out of this sucker as close to the all-time high as we can, right? So if they open us up green or even red and they pop it a little bit, we'll be looking to swing it short and we'll risk close above all-time high or close above Friday's high. Typically what you'll see is this would be the evening star reversal setup because you have a beautiful bullish engulfing candle right here. And then at the top of this uptrend is a doji, a textbook doji. Now, what we want to see on Monday would be a textbook or pretty close to it, bearish engulfing candle right here. We don't have any data on Monday, but so yeah, let's just take a quick look here at the economic calendar. Okay, and this week, sorry, next week is so if we're looking here on Monday is a day off. So I gotta filter out some stuff. All I care about on this is Japan, China, and US. United Kingdom, and it's fine. But all these others, so I filter out this stuff if you guys want to know how I do that. All right, there. And then I do two stars and 3 stars. I don't care about the 1 star stuff. So there we go. All right. So if we look at this, on Monday we have somebody. We have an FOMC member speaking, Harker. We have Bowman speaking too. This is fantastic. So we could see that downside happen. Ooh, Monday's gonna be interesting. Oh my God, you guys. You know what? Holy shit. So we could actually see a new all-time high on Monday. And while the market's closed. And then they would probably close it within the range. And then Tuesday we fucking dump. I'm not gonna say that's like 100%, but I've seen it multiple times. Let's take a look at ES here. There is a date. I know who is it? All the OGs in here, which most of you guys are. Remember this fucking date in September. Yeah, we're going back to September. Let's take a look at it. So here's US 500, and let's take a look at the 1 hour, and let's go back to September. And there was a date in September. September. Yep. Right here. Got it. Okay. So I don't know how I remember this shit. Honestly, I have no idea. But I remember that there was a Monday that was a holiday in September, and I remember exactly what happened. Stupid shit. But it was Labor Day. Was it Labor Day? Yeah, Labor Day. Yes, exactly, RS. So this was a holiday on Monday. It was Labor Day Monday. Look at this now. Pay very close attention to this. This is fucking crazy. So here we have Sunday. No, Friday. So this was Friday, August 30th. We opened up the room on this day. We caught this whole fucking knife down on Friday. No. We caught this knife down. I remember that. Remember that, Clay? Oh my God, you guys remember this shit? This is a fun day. So we actually, oh my God, I remember this was fucking sick. So we just opened the room, and we had this trend line right here. This trend line, Clay, remember this shit, dude? This was crazy. So we caught the trend line break down. And then we're watching this, and I'm like, hey guys, there's a dragonfly doji here on the 1 hour. And then I'm like, I wouldn't be surprised if they retested this trend line, we had, and they fucking did into close. Look at this move. It was like 1,000% play on the way up. It was nuts. It was so fun. Anyways, sorry I got off tangent there. That was fun. I remember that day. That was sick because we caught like 400, 500% on the way down, and then 1,000% play on the way up. Literally off this doji print. We're like, oh my god, that's bullish as fuck. So let me get back to the point. Okay, so this was a Friday. Okay, now here was an all-time high, right? You can see here, this was previous all-time high, and they just squeaked one right above it, right? And then Sunday happens. These are futures now, right? Futures come in, and then they start ripping it on Monday, the day off. They ripped it into Tuesday night, right? Look at this. So Monday night, there's Monday. Where are you at? Come on, Tuesday. There we go. Yep, there, Tuesday morning, right there. There's the midnight session. They retested the high. Okay, so right at the London flip, for everyone who's playing futures, I will most likely alert puts here at this time. If I'm up, I probably will be. So remember this, RS, fucking remember this, because you're gonna get paid if this plays, because you know these patterns go. So London flip that Tuesday, because this time for all this was holiday. We're in the similar situation where we have a holiday on Monday. We are near all-time highs, right fucking bumping against them. And look at this. 1 o'clock fades, the London fades into the open right here. And look at this open. I'll never forget this. It opened and just fucking drilled. You know what was the clue? You guys, you know what the clue was on this drill? HYG and JNK. The bond markets. I remember this too at fucking T. So the bond market was telling the whole story before the opened. The bond market. So this actually happened. So this happened. It opened up and it flushed from 56.16 all the way down into close. 100 points flush. Is that going to happen this Monday or Tuesday? I don't think so. I don't think that's going to happen. I just don't, because we're in a little bit different dynamic with the VIX and stuff. Could it happen? Absolutely. But we have VIX expiration next Wednesday. We have OPEX Friday too. So we have a lot of shit that happens. Typically we dump on VIX X and or after. So now this is sick. Oh my God, I love this. Ugh, I love this game. So here's the deal. What if they do flush us down and then chop us into VIX expiration and then rip it into OPEX? Get everybody heavy fucking short and then squeeze it, right? If they do that, we'll be ready for it because we're talking about it today. And I'll have that in my mind, ready to go. Because on the cues for this upcoming Friday, we have 430 million call side to 18 million put side on the cues. That's a 23-to-1 ratio. That's fucking crazy. On the cues, that's tech. So, why would they rinse that to zero? I don't think they would. If I was a crook, what I would do? What's Monday and Tuesday looking like? So Monday on 14th, Monday's bearish, Tuesday's bearish. There's very little money. There's like fucking no money on Monday, Tuesday, Wednesday. So if I was a crook, what I would do is, let's say this is Monday, or sorry, this is Tuesday. This is Tuesday. If I was a crook, I would dump it Tuesday. I would dump it all the way Tuesday. Fuck everybody. Get everybody shooken out of all their calls that are expiring on Friday. Like completely rattle the market. Then I'd fucking chop it. I'd chop it Wednesday, and then Thursday I'd start to climb it up. And I'd squeeze it Thursday. I'd start squeezing it Thursday because IBKR cash settles Thursday. And I'd squeeze those contracts out. Not many people know how much money's on IBKR chains. So I'd squeeze it Thursday, and then I'd fucking rip it Friday. Catching everybody down here who's shorting the hole. And then everybody trying to short Thursday and fuck them all. And then I juice that son of a bitch up, that chain. If I was a crook, that's what I would do. Because on this upcoming Friday, this OPEX, the AM chain has 28 billion call side to 1 billion put side. That's not much puts. Like that's barely any. So, but here's the thing. If they do dump us down into the early week, obviously that's going to probably drop 4 or 5 billion, right? But if they load weeklies, they could come close to doubling the chain on the call side on a squeeze up, which if I was a crook, that's what I'd want to do. I'd bait everyone fucking short, catch them off guard early in the week, and then I keep them baited short and then just fucking rip it in their face as I'm going long, right? And so we're going to pay attention to that. That's a perfect setup, actually. Is this recording, Clay? So Cream, or look at this. Look at this setup. Look at this. I think this pattern is going to play. Dump, chop, dump, and then squeeze it. Yeah, well, because let's take a look at the VIX now. So let me go back to this whole thing. So this was, you guys see this? I want to show you how, like, what we're going to pay attention to on the open, right? So RS is going to be, lighting up our discount value ranges that we'll be looking, if this all sets up, looking to the downside, right? He'll post it, pay attention to the levels, mark them on your charts, and then let's take a look at HYG. I hope they don't gap us down. I hope they bait everyone, bait them all along right off the open on a slight dip to 6,100 or something, and then just fucking smoke it down to 60.50 or 66,000. That would be sick. And then everybody's gonna be bearish, but we're gonna know that 6,000 is a fucking mean reversion, and we're gonna long that shit right off the golden pocket. Oh God, it's fun. All right, so let's go back to HYG in September. Yeah, right here. Boom, right here. Here you go. So look what happened. So this is HYG. This is the high yield corporate bond ETF. Okay, this gives indications of where the market is going to go before it happens. So does JNK. JNK is the higher risk. It's the junk bond market, right? And that's the higher risk bond market that's indicating where the Q in risk is. So it's like a risk on indicator or risk off. So you can see I have this big pivot here at 79.43. But let's take a look at that particular day. So Friday, we closed the market here at 79.42. Before the market opened, look where this opened up at on Tuesday. It was opened up on a gap down. You see that? That's great. That was telling everybody, go fucking short, go short, go short, go short. JNK, same thing. It opened up in a massive gap down and then pushed down. And then look, pushed down and then fucking ripped. Right? And you can see by SPX, did the same. So was the Tuesday. It gapped down, or sorry, gapped down slightly, and then just dumped, right? And then as soon as that thing, what happened? Rip up and just trended up, and the bond market was showing the same thing, and just ripped right up. So, that's what we're gonna watch for moving forward for next week. All right. Any questions on that? All right, great. Let's take a look at the VIX quick. So we're back into the demand zone on the VIX. This zone of, between 15 or 1488 and call it 1413, this is the zone where you want to be risk off in the markets. Not China. I'm just saying in the US markets. Okay. If this is dumping and we're coming into a demand zone, the likelihood that we have a big pop on the VIX is going to be high. If we look back from December, every time we've tapped into the zone, we've gotten a massive pop on the VIX. So let's now take a look at the divergences and see if we see anything. Excuse me. I don't see anything there. Let's see the 1 hour. Don't see anything there yet, but we can draw a falling wedge right here. This is a falling wedge. And you know what's interesting? So now we're going to get into an FV. What an FV is. And an apex. Okay. So hold the VIX up, grind theta. I do. Yeah, I look at VVIX, but I just focus on actual VIX though. It's a little easier for me right now because I have it charted out. And okay, so this is getting tight. Right, like a so we have point here of an anchor, and then here's our anchor here. Okay, why did I not draw this up way up here? Where do I go? Right? The reason why I did not draw that is because when this is important for trend lines and understanding how to draw your trend lines is as price moves, the range tightens up and the actual trend shifts. For example, as you stair step up and out of a stock, right? Or actually, let's just say, so the range goes from up here, right, to tighter. So in the beginning, this was the trend for here, right? And then this trend right here, it shifted. It shifted more down, right? So this support fell, came down, found support here, and then bounced. So the trend, I hope this makes sense. The trend shifted from here, right, to now here. That's the shift. So when you draw your trend lines, that's why you have to adjust them, is because the trend's shifting. And if you look at Wyckoff, let's pull it up quick. And we'll talk about accumulation quick and how it starts to pop, and this will tie it all in to the VIX. So if you look at the trend here, okay, so in the beginning of, let's just say we're here, okay, because we kind of are, we're in this spot. Okay, here's your trend, right? Let me get this really big. Okay, there's your trend, right? And here's your other trend line right here. This is what you literally just drew. Right? And so if that's your trend right there, it's shifted, right? So because it fell, it's falling now. Let me get out of these. So now it's shifted from here to now. It's going to shift because it fell through. Fuck. There, and then there. You see that? So the trend shifted. It came down. It's exactly how I just showed you it shifted. So you have to adjust that, right? And the same goes for on the upside. When you have a trend, right? Here's your trend. Right? There's your trend. And here's your channel. Actually, that wouldn't be your channel. It doesn't. The channel really doesn't matter, actually. But it's more on the upside. It's more about the support and the trend, right? But see, look here. So you have the trend there, and then what happens? The trend starts to shift to there, right? So you can no longer look at this. You could keep this there as a secondary support, but you have to understand as the trend shifts, it has to so does the trend line. So, and then as you get into a parabolic state, as it starts to flag, and I'm going to give you another example of this. There's your bull flag, right? As it starts to shift, now what happens? Watch this. So you have this trend, then it goes like this. Then the trend goes like that. So so if you're thinking, oh man, I got to buy off this trend line, or or now I buy off this, like, no, you have to understand how things are shifting. So as things start to shift, so does your trend line. It's a parabola, and it's about the parabolic curve. It's like a statistical thing with math and how trends shift, and that's where it's really important to understand when you're drawing your trend lines, because it's this curve, right? You see a stock base. See a stock base. It does this. Puts the spring in, and it starts to move, and then all of a sudden here, and then it goes and goes, right? That's the parabolic curve up. And a perfect example of this is Baba, China, all this ping pong stuff, Let's take a look at Baba. Look, like, it's a perfect example, right? And look what, and so how did we just nail this thing down and trade it so great? Is because in the beginning, I identified the trading range, right? I had this here. Okay, this was the upper box. This was my upper limit. I knew once we broke this spot at 87, it was going to start to go parabolic, right? And so this is that whole setup, right? You can see how the trend shifts. One, up, down, up, down, up, down, up, down, up. Test it. Up, LPS, shoots up, flags, and goes. Right? That's the parabolic shift. That's the curve. So as we're drawing our trend lines, we have to understand that, look, the trend originally was here. These are our entries. Entry points are right there. You get in here, here, right? And then it shifts because it's getting out of accumulation. The sellers, the supply is lessening and the demand is increasing. And what else is happening, right? The puts are getting the hell out of the way and the calls are buying. So that creates more upside pressure. So now the trend shifts. So now where do you buy? Here, here. We traded this. We literally traded this spot right here. And then we traded this spot right here and caught gap ups. Gap up, sell, right? They push it down, should have bought here, should have bought the retest, right? And then you hold for another gap up, right? And then, you know, see what I'm saying? So like, you know, when you understand where you're at in the accumulation or distribution cycles, you know, and you understand how to draw your trend lines, you can very easily, so now we're here and now it's going to go in parabolic mode and we shift our trend again. Now what happens? Now, as long as we hold this trend, we're good. But once we breaks, then we're in caution mode, right? Because then what could happen is now what we're looking for is this. We're looking for, I said my thesis is we gap up and then we dump and then it goes to another leg. Why would I think that? Because it fits like a glove for everything that we're looking at with the dollar, with accumulation, with distribution, right? So, hold on, let me get out of that. It's the wrong one. So as we go out, as we do one accumulation, okay, you can only have two back to back before it has to go into distribution. So they could keep reaccumulating and sending it higher, is what we're expecting. But as we shoot up, this is accumulation right here. This is accumulation, and this is this mode we're in. So we have yet to hit this spot right here, this drop. They have not hit it yet. So that means that we have a lot more upside. So if that's the case, how do we time this and find that drop? Well, I'm going to pop over to the dollar. This is our map for the dollar, and we are expecting early next week a gap down. If it gaps down into our support, I'm going to draw another support right here. If it gaps down into this support zone, right? If it gaps down into this zone, now we don't long China. Well, let's short it. We could short it because we're looking for a bounce in the dollar off some type of data or whatever, news. And then we'll look to long it heavy off this level. Long with time. And then once the dollar really flushes down, this is going to be a multi-month long on this move. And then once the dollar bottoms, we're not going to long China anymore. We're just going to stay away. Okay. And how does that fit in with BABA? And BABA's the big dog. That's why we're talking about it, because this is the big dog of the stock market, or for China. And everything else will follow, right? You know, PDD's in the same mode, right? It's, you know, getting into that parabolic state, right? And then you have Tiger doing the same thing. Like, this is lagging a little bit. You know, this thing's going to be at $10 next week. Said it multiple times. It will. Look at Futu. I alerted the 120 calls right here, but I talked about them, but I never got in them. Yeah, and I was talking about the 120 calls for this week, and it's too bad because that was an easy one. I should have alerted it. But anyways, then look, Billy's doing the same thing. It's just starting these moves, right? So yeah, it's an island gap up reversal. So what Billy could do is Oops. Really good flag here. And then go. And then pull back and then launch. Because all these stocks, they're fitting with the dollar. It's going to dump, right? They catch a big bid. And then all of a sudden, like, we have earnings on BABA. So this is a fun week for China. You know, BABA's got earnings Tuesday pre-market. Baidudu has earnings Tuesday morning pre-market. So that's why I alerted the Baidudu calls for March Friday, because I'm thinking in my head, man, this is a A plus retest of this trend. It broke out, came back, it tested. Now they're most likely going to beat earnings, and it's going to go like this. It's going to gap, right? And then it could get into that parabolic state and just keep fucking going. And then what's going to happen? The dollar is going to drop to that support, and then Baidudu is going to do this. Boop, come down, right? And BABA is going to do the same shit. It's going to probably gap up this week early, run into earnings, and then the earnings are going to be a short. And then the earnings are going to fucking dump it back to support right here. And the dollar's going to pop. And then what happens? Everybody's going to be shaken out of China, and then the big move really happens. The real big move happens. And that's when you see BABA go up here to 170. And that's when you see the dollar flush down, right? All this is going to play out. You guys feeling that? And it's just a sequence in like understanding the dance and how it fits. And so like RS has made the comment a couple times, like, man, you just keep slapping China around, you know? And it's like, yeah, absolutely. And this is, I'm trying to teach y'all, this is why, is because it's the easy, like I'm all about like easy trades. Like everybody is, right? Easy entry, easy risk, you know, give me 100% gap up all the time. And then we'll just chill, you know, make our money and leave. And when you know where something is in its cycle and it has such good confluence, you just ring the register, in, out, ring the register, maybe buy. So my point is, I'm getting it. I love the moving pieces. This is great. Yeah, absolutely. Yeah. All right, no problem, brother. Enjoy your day. So like that's the point, is like, you know, when this move happens, right? So for example, Baba's got earnings, maybe they gap it up, run it into earnings, and then they rinse it to 17. Everybody's going to be shitting themselves, and we're going to be sitting there waiting to load March and June calls. Okay. And we're going to get out of the money cheap, like the 140s, the 150s, right? And then when this move happens, oh my God, it's going to change your accounts. It's going to change them. You could take probably $50, turn it into 200-300, right? Or more, right? So that's going to be exciting, right? And so all of it kind of fits. All right, what was the other thing we're going to cover? So that talked a little bit about entries, right? And then it talked about how we can fit these pieces together, right? And we have this falling wedge on the VIX, which is what we're going to watch. And then let's talk about entries. Let's go to Tesla. So Tesla was an interesting one. I fucked it up last week on Thursday. No, Friday. No, Wednesday. Yeah, we bottomed on Wednesday. So we stopped out for break even, so it really wasn't a big fuck up. But the point is that was just like I wasn't thinking in terms of like 4 or 5 steps ahead in my mind, and I should have been. I should have been, and I should have been thinking, man, I know Tesla just bottomed out in pre-market. Let's long for the week and next week, right? Because, we got into calls right here at 31, 33 zone, right? And I was concerned that we were going to go make a new low and then rip or test the low. And so I wanted to have tight stops, but I should have been thinking, okay, put a starter position in. Okay. Put a starter in. And if it does drop, okay, add more, right? And your risk would be right here. Yeah, if you have a starter position for one contract, right? Or two contracts, if it drops to here, they're probably going to be down 30, 40%, right? Now, the tricky part is like, entries are like getting great entries on a swing are easy for me. They're very easy. I can get it within, pretty damn close to bottom, near bottom, which is really all you're looking for when you're buying 2 weeks out to a month or two, right? But when you have a weekly contract or a day trade, or especially a zero dated option, entries are fucking hard. They're very difficult. And how are we going to, like I put out the alert, right? Thursday. Hold on a second. Let me see this. Thursday. 6:30 popped up. Oh yeah. Okay. So Thursday, put the alert out right here. Right? And the alert was for the 360 calls expiring this week at 2.7 or something like that. Right? That was the alert on Tesla. Why would I alert something like this? There. Well, because what I saw was 25,000 contracts of those call options get hit. There. They bought them. So I'm like, oh my God. Like, so two scenarios could happen. The first scenario is Tesla goes like this, straight up, right? The second scenario happened. It actually went down, right? And then went up. So how do we get great entries? Well, one of two ways. Probably two ways in general. Okay. So if you have a small account, number one, it's a little trickier. You have to be more disciplined and you're going to miss moves. If you have a small account, you're going to miss moves because a small account can't take this. They can't. Not even because the reason why is because if you grab one contract and it drops, so like what I did was this, and I knew this could happen. That's why I was on voice and I said, guys, don't take your entry yet. Just wait, just wait, just wait, just wait. Okay, because I put the alert, and then as soon as I said it, I'm like, hold on, we're gonna wait because I wanted confirmation, right? And I can't do this on every alert. This is not possible because I like to watch a lot of stuff at the same time. And I'm watching not just gamma, not just flow, but I'm watching price action and tickers and all this other shit. And I want to because I don't want to just play one ticker. Okay? That doesn't mean you guys got to play 5 tickers. That's just me. And sometimes people are at work and they're like, shit, I missed the fucking alert. Damn it. Well, it's okay in this room because there's multiple opportunities. There's multiple opportunities that will happen, right? And for everybody that's in here trading daily, take a look at it as this. Hey, you know what? It's a little extended, right? So let's take a look at some of these EMAs quick. It's a little extended right here. He alerted it and he's like, okay, so I alerted it and I said, okay, 2.7 calls, but hold on, guys, let's wait. Let's wait. And then I say, okay, then what am I doing in the moment? I'm watching price action. I'm watching. I literally have the contract pulled up, the 360 or the 360 Tesla calls. And I'm like, oh my god, they fucking loaded them. They loaded the 350s. There's like 20 some thousand contracts, and now they're bringing it down. Okay, all right, cool. I'm just watching it, and what I'm doing is as price starts to come down, I'm watching the wicks, and I'm watching support. I'm watching this area right here. And I'm watching this area right here. And I'm watching this area right here. And I'm watching these wicks right here and see if these zones hold. And as soon as price starts to, it starts to do this, it wicks down, right? It wicks down and then it starts to slow. It starts to come back up. Then I start to look at entries. And then it comes down a little bit. And okay, I'm going to get in because it's slowing in this zone. The wick is slowing. And then I get in. And that's why I said 1.9 entry, right? We were off bottom by 10 bucks, 10 cents, whatever you want to call it. So we got the low was 1.8. We got in at 1.9 and we took them to 4.5. Right? We started scaling here at 52. The target was 55 and they shot it over a little bit, right? And that's how we got such a great entry, right? But there's the thing. Let's say if they didn't do that, right? What if they, because this happens too. What if they, I alert it 2.7. I'm like, hold on, guys, wait. And it does this. Boom, right? Because it does that. Well, then we miss the fucking trade. Unless you just slap it at 2.7 and you're like, okay, I got to get in and they're going to go. And then all of a sudden you catch the move and boom, you got to get out, right? That happens too. But when you're looking at entries, you got to understand, like, hold on a second. Where are we at with the EMAs? Right? Where are we at? On, where's this Tesla? Fuck, Tesla. Where are we at? On the 5. Are we extended? Okay, we're extended. If it comes back in and retests supply zone or demand zone here, and then holds these EMAs, I can take calls here, risking a breakdown underneath the 21 on a close of the 5 minute. Boom. You get in, you hold, and you don't sell unless it breaks down underneath, right? You're in and you go. Okay. When you start to see it extend out, you sell into that strength. Now let's take a look at Bitcoin for a second. All right, so I want to see if there's any volatility here on Bitcoin. Let's say, and I don't do this on the 1 minute, but I'm going to use the 1 minute because I want movement. Okay, so let's say we are trying to get a good entry, right? All right, so we're trying to get a good entry, and we're like, all right, I'm going to get into. Maybe you're looking to get in calls. For this situation, it doesn't really matter. Okay. Well, let's take a look at this price action here on Bitcoin. And we're going to focus on entries. So let's just say we're going to try to get into puts. Okay. And now price. We're waiting for price to do this, to push up. Right. Oh, shoot. Now let's say we're trying to get in calls. Here. No. All right. So you see how this. All right, so this is the 1 minute. What I wanted you to focus on when you do this strategy is on the 15 or the 30 minute, not the 1 minute, but because this is crazy shit going on, right? So either way, what I want you to see is this. Let's just say here, for this example, let's say we're trying to get in calls, right? Because this makes sense because it's actually coming up. It's like curling up. You have the EMAs crossed over. Everything looks good, right? So let's say it's calls. You guys saw this wick that came down, right? So as it's coming down, you want to be getting ready to load calls. And how do you want to get ready to load calls? Well, you got to get your contracts up and ready to go. Because if you're looking for calls, okay, and you're like, all right, well, we're in an uptrend, we're curling up, and we're on support. Okay, great. Well, what happened here in this moment? This wick, it basically made this support, right? And it just tap, tap, and then fucking ripped. Like, look at that. It moved literally almost 100 points, right? In 2 minutes, right? So now we're extended and we're pushed up. So now let's just say we're going to try to get calls. All right, well, I'm looking to buy calls on the wick shooting up, or sorry, puts. I'm trying to buy puts on this move up right here, right? Because as soon as I catch calls, or sorry, puts up here on that wick up, as it's wicking up now, I'm looking at getting puts. Okay, push up a little more, push up a little more. All right, I'm gonna get puts now, right? As it pushes up. Now I'm already green, right? And then if I get a reversion back in, right, then it's good. But now where's my stop? My stop is above this close, right? So if they keep pushing it up, oh, now I stopped out. So if I would have got in puts down here at the bottom of the candle, my risk was a lot higher. It's really important because this is how you trade SPX. For everybody that loves to trade SPX 0DTE, or any ticker for that matter, but mainly futures and 0DTE stuff, as the price is shooting up into resistance. Let's take a look here. Where's resistance? We're right at resistance. This is a supply zone. So we want to be grabbing puts as it shoots up into a heavy resistance at the top of the wick, right? So you can see here that as this thing, it's hard to do it on the one because really you want to do this on the 15 or the 30. So let's take a look at the 15. I didn't think we were gonna get this much movement. So, as this candle was pushing up, you grab the puts, right? What's your risk? Your risk is a specific level, right? A specific level or the high point of that candle. Right? So you can see here, this is a good zone, right? And it's also a reversion of an extension away on the downside. So, looking at this, as this came down, you're looking at calls, right? Why are you looking at calls? Because there's a reversion play right here. That's a big reversion, right? And on the upside, we are in a downtrend on the 15, right? You have the crossover. So you could be like, okay, well, where would I want to grab puts? Well, maybe right here, right? But ideally, that's a little higher risk because what you want to see is you want to see them push it up into the 21 or into the 13 and grab as the wick or as the candle, the body of the candle is slowing down. So here it's pushing up again. Say it gets into the 21, it starts to slow down, you get into puts. It's like, for those who want to be great at trading 0DTEs or getting good entries with 2DTE, you have to do this. You have to master it. And it makes your balls drop, right? It literally does. It's very challenging. But when you do this and you define where your entry is, and as this candle starts to push up, push up, push up, push up, and you're like, oh, all right, well, my risk is defined by the 20. I'm getting inputs. And then all of a sudden, what happens? It wicks down. And now you're up 100% instantly, and you get the fuck out. Right? Does that make sense? Okay, it's a very, very powerful strategy that all great traders use. Okay. As the wick is pushing down, here's the EMAs, right? Now price is pushing down, extending down. I'm getting calls. I'm looking for calls. All right, now the wick is slowing down. The body of the candle is slowing down. It's going to start to wick up. All right, I'm in calls. And then all of a sudden, boom, massive wick. Thank you. Now the candle closes up here. And I just made 200% in less than a few minutes. Please play B17, low, OG, PB, Stan. Do you guys understand this? It's if you don't, it's not a big deal. We'll go over it on Monday too, if we have time. If price action is not too crazy. Okay, it is scary, but yeah, but this is like really crucial because honestly, let's think about this. Okay, let's say my name is my name is Tommy Toughnuts, right? And but I'm always I'm like the price is coming down and I'm like puts. Oh, let me get puts. Let me get puts. Let me get puts. Oh fuck, I'm down. Right? I made 20%, but I can't get out fast enough. Right? I can't get out. That's chasing the hole. Okay. Same thing here. You're like, oh, price looks weak. Price looks weak. Price looks. Oh, it's flushing. I'm gonna get inputs. Oh fuck. Like, right? That happens all the time to people. But let's shift and think about everything from a smart, intelligent, high quality trader, like a big dog trader, right? These guys who you see when Vince and I say, fuck, they just slammed 3,000 contracts. They're not slamming them up here or here. They're buying them right fucking there. Right there. You guys know this because we talk about it all the time. They're fucking buying that shit right at the bottom. They boom, slam 2,000 calls. They're fucking up fat in 5 minutes. Yeah. Well, that's the 4D mindset, right? That we 4D market mindset, right? So, and you gotta understand that's what you have to do to make it, right? You have to do that to make it. Take a look at MSTR, right? Look at this. You know how many fucking people are chasing up here on this move, and then they rug it. How many people are buying this? Not many. And then they chase it again. Oh fuck, right? And then boom, you know, like. So that's where I want everyone to master. And the same go. And you know what the best part is? Okay. By the way, congratulations, Stan. Dude, I'm so proud of you, man. Um, great fucking trading. That's awesome to double your account. Yeah, I'm talking. Yeah, it's so you do this on the 15-minute or the 30-minute. You do not do it on the 5. Why is that? Or the 10. You do not do it on the 10. You do not do it on the 12. You do not do it anything shorter than the 15. You can even do it on the hourly, right? Like, let's look at the hourly. The reason why I like these bigger time frames when you're doing this is because you're trying to catch the wick, the bottom of the wick, right? And if price is moving too fast, you don't know where the bottom is. Does that make sense? Think about it. Think about this, OG. The speed at which an hourly candle moves versus the speed at which a 5-minute candle moves. Right? Yes. Congratulations, Stan. Absolutely fucking awesome. I'm so proud of you. Now, Stan, now, no hot dogging. Okay? No hot dogging. Okay? I want you to actually back off. Okay? Do not be doing weeklies. I want you to take if I'm not gonna look, this is not financial advice, but if I were you, I would be backing off size, and I would focus on the same thing, high quality swing setup. that fits your risk parameters, as long as you can define your risk and say, you know what, I like these BABA calls. It just dumped off earnings, and we just talked about how the dollar popped. The dollar just popped. This is a great risk to reward. So I'm going to put, $200 into this call option, and I'm going to buy it out till March, right? And then all of a sudden, BABA pops and it squeezes, and you make another 400 or 500% on that trade. Now you're at $3,000 instead of two, and then you do it again, and then you do it again. And then before you know it, you've taken 3 or 4 trades, or maybe 5 trades over the course of the next 2 to 3 weeks, and your account's at $5,000-6,000. That's how you take the count from 1,000 to 2,000 to 4,000 or 5,000, right? For me, what I'm doing with the $1,000 account is I'm trying to catch shorter dated options and boost it quicker. But I'm also taking swings, and for me, how I trade a small account is I'll take my 30% unless I catch a gap up, like on Baidu, right? I'll take the 30% all the time. I'll lock it in, and then I'll make sure that I don't lose. I don't want to lose much on small account at all. I don't want to do that, because you can recover from a $50 or you can recover from a $20 loss really quick. But you take a $50 and $100 loss on a small account, then you're shook. Your confidence is shook. You're a little sketch, right? Yeah, and that was a perfect trade. Yeah, exactly. You took 2 for $160. You sold one at 3 and let the other one run with the stops in. That's how we trade in this room. That's how we trade. Okay, and that's how you want to build your trading profile. Now, if those 8-6, those trades that you got, maybe what if they would have dropped to 7-0? Well, now you're down $30 and you got to make a decision. Is this trade worthwhile, or should I cut it for a $30 loss and look for a better trade, right? Because $30 now puts you under 1,000 at 970, right? And you can't afford to have those things go down much, right? So because you got 2 for so cheap, and BABA wasn't a great trend, it was an alert, it was a great setup, the risk to reward was fucking awesome, right? So good job. Keep doing what you're doing. Do not change. And if you hear somebody say something like, oh man, you should try this strategy, DMT, SMT, ICT, PCP shit, oh my God, it's awesome. You should say, great, awesome, I'm so happy for you, that's awesome. You put your fucking blinders on and you keep doing what you're doing. Like, if I followed everybody that told me, man, you should try this, I would be broke. Like, I would not be making money. That's for sure. So, when you find something that works for you, just repeating it and repeating it and repeating it. Do not change. Do not get overconfident. Okay? Yeah, you know why you miss BABA, OG? Because you're focused on Unity and all that other shit. Dude, we run the register on BABA. I mean, we traded the damn thing from $85 all the way straight to the top multiple times. In the $85, or sorry, what was we got in the $90 calls for February 7th at 1.25 to 1.3. And we closed them at $600 to $700 a contract. And they ended up closing out that week at I think $1,500. Yeah, that's okay though if you made money, right? And then that's the next step, right, Kareem? The next step is doing what Stan did, saying, hey, you know what? I got in, I got 2 of them, I made $200, I covered my money. That's the most important thing. So if you look at he bought 2 of them for $180 or 180 or $175, right? So, well, don't say that because it might take off next week. We don't know. But he bought two. This is really important for everybody. He bought two for $175, right? And he sold one at $310. So his trade now is completely free. Right? This is so important. This is why when you see me alert up 30%, 40%, boom, trim. I take depending on the trade, I'll take between 30 to 50% or to 70% off the trade, right? For small accounts on weekly day trades, you should be out 70 to 100% of the trade at 30% minimum. And every time you get in and you're up 30%, take some money off that. Take it. Lock that shit in. That's a good trade. And if you have multiple contracts, then what you do is the first thing you do, you put your stops at break even or just slightly above them, right? Because then that way you can't lose money. You're good, right? Has to happen. So he made his trade free by selling one contract for 300. He paid 175, so he made $125, win or lose, even if the other contract goes to zero, right? So then the other contract keeps going, and he's just chilling, right, Stan? I'm assuming that's what you did, right? Yeah. So that's what we want to do on every single trade. Get in, take a trim, let our runners go, and let them go. If the stock doesn't break down, the trend doesn't break, there's no reason to get in or to get out. Just let the fucker go. SMCI is one where I'll tell you right now, I messed it up. We made 250% on this trade. And I'm telling you, I messed it up. We got in SMCI $45 calls. You can check the swings channel. We got in the SMCI $45 calls. Oh, here comes OG typing. I'm going to get an ass chewing here. Yeah, the reason why we cut him, OG, was this. Because AMAT had earnings the next day. And I think it was AMAT or somebody else. There's two chip companies, and I was seeing puts hit the tape on SMCI, and the last thing I wanted to do was see your green trade go red. That's why we took the money and left, right? So, yeah, we made money on SMCI every time. We've yet to make money or not make money on it, but let's talk about this. So I alerted the $45 calls on SMCI for March at 1.4, $140 for one. And where did I alert it? At $28. Okay. We sold those for over 250% on this pressure up into 38, right? It's a hell of a move. $10 move on March calls. I'll take that every day of the week and twice on Sunday, right? Now, what's the interesting thing is I was looking for a move down first. So they had earnings, right? And I was looking for this move down to test this support at 33, and they didn't. They did it on fucking earnings, actual earnings. So look, this was earnings. They did the retest of, which is LPSY. They did it here on earnings. This wick, that counts. That was the LPSY test. Then what happened? Then they flagged it out. What is this? SOS BULPS. And now it's going to go. Okay? It's going to rip face. So if there's a dip on SMCI, we want to buy out of the money calls for June and May. Because this thing is going to go crazy. It will most likely hit a Hyundai. Okay, 100. Why do I think it's going to hit 100? Now let's get into an FV. What is an FV? Fair value. Why do we care about FVs? Because triangles are life. Triangles are everywhere in life. They're in your backyard, they're on your TV, they're everywhere. They're on your screens. You know, everywhere you see a triangle, you know, a triangle. Right? You got here, 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 right? You have an angle here, an angle here, an angle here, right? That's the apex, right? So the apex of a triangle. Now, why do we trade these? Who gives a fuck about, triangles and shit? Why are they important? Okay, this is why. I'm gonna get out of here, move here, get out of this, and I'm gonna show you something. Some of you guys know this, but it's a good refresher. Why is it important? This is why. Okay. So if you look, what do you see here, guys? The triangles everywhere, right? This is how accumulation happens, and this is how distribution happens, and this is how the market moves, right? Well, yo, you don't believe me? Oh, okay, all right. Well, let's go to Bitcoin. Okay, what do we see here? Okay, what do you see? And let's take all the indicators off. Get all this garbage off. There we go. Now we're clean. Clean chart. What do you see? Triangles everywhere. Here's a triangle. Okay, triangle right there. Okay, here's a triangle. Here's a triangle. Here's a triangle. Literally, it's doing the same thing as a schematic. This is how algos buy and sell, and how algos sell, and how large funds accumulate stuff. Look at this. Look at all these triangles. It's a beautiful thing. Right? A big triangle, right? So that's why this is all important, right? Let's go back to SMCI. Why is this stuff even up here? What the heck's going on here, Harry? Oh, it's the split. That's why. Get out. Get out. Remember back in November, I told you guys that this whole situation with SMCI was bullshit? Anybody remember that? When I said, yeah, SMCIs, this is all bullshit. It's not real. There's no way they let this stock into the S&P 500 and then have them fucking have accounting issues. Like, give me a fucking break. It's a total liquidity grab. So another psychological cue is, yeah, you guys remember when I was like, I'm calling bullshit, calling bullshit. I was literally calling bullshit at the bottom. So let's take a look at this. Triangles. So now I've showed you, proved to you that triangles are fucking everywhere in the market, right? So now, so when you're drawing your FVs, right, or sorry, your triangles, your wedges, right, you have this, right? And then you have this one. Here's your FV. Draw it there. Yeah, that fits. Yeah, so here's your falling wedge, right? Or you could just draw this like this. It's fine. It doesn't really matter. Okay, so as it comes down into the apex, right? And I'm going to draw it here so you guys can see this. So as the price is coming down, it shoots up, up, gets tight into this wedge, right, you're going to see a big reaction here. But it can come out early, right? It can come out a lot earlier. And now what I want you to pay attention to is watch what happens when it comes out. It goes out, it hits resistance right there, right here, right? Support, now resistance. Then what does it do? It rejects, comes back down, and where does it retest? It retests this trend line, right, guys? Okay, this is really important. This is teaching you guys about structure, price movement, and fair FVs, okay? And apexes, they're all the same. Hold on, shit, so let me reorganize this quick for a second. Okay, so as we come down into this FV, or sorry, the apex of the triangle, how do you know it's going to break out, and how do you know where it's going to go and get rejected? Number one, as this price comes down, boom, it's now this price action is now support, right? We know that candle structure is there. Then it bounces back into here, becomes resistance. Then it comes down, it breaks the support, comes back up, back tests it, becomes resistance, comes down, and now it's making this channel, which is a falling wedge or triangle, right? Then as it breaks out, your target is this always, because you know it's going to get rejected at some point. And it's going to, then what's going to happen is it's going to come down to either A, this level, or this level and back test. So it'll be this and there, right? And then there, or it does this. It comes down a little lower and shakes people out and then goes, right? And what's interesting about this is as these things break out, what happens? What is this? You have a inverse head and shoulders. Here, here, and here. Here's your neckline. And what are they going to do? Pop it and bull flag it. Another triangle on top of the support and then fucking rip it. How fucking cool is that? And where's your target when you get out of this? When you do this? Where's your target? It's this, it's the midline, right? If this is the line, whoops. It's the midline. All right, so if this is your triangle right here, let's just extend this out. Hold on a second here. Okay, so let's say this is the midline, or sorry, the top of the line, the top line right here. Okay, and this is the bottom of it, right? So there's your, this zone is the triangle, right? Top of it and the bottom. Okay, this is the apex, the point, the tip of it. Where is the center? It's right in the middle, right there. So this is called the FV. It's called fair value. This is the fair value of the breakout of this falling wedge. Make sense? Well, throw a GIF in the chat if you're understanding this completely. Throw a 2 in the chat if you're not following, and I need to go through this more. It's fine either way. It doesn't matter. 1? Okay, 1's good. So you guys got it. Okay. So when I'm trading and I'm alerting stuff, this is one of my favorite strategies. It's fucking awesome. Now, with that said, you're not guaranteed to get this move where it goes like this. And then you sell right here in the FV, right? You're not guaranteed it, but the likelihood is like 75% or something like that. 70% that this will move. This move will happen to the center line of the falling wedge, which is the FV. That's the fair value of the breakout, right? And the closer you get to this apex into the wedge, the more explosive the move is. It's like coiling and compression. I talk about compression a lot, right? So if we talk about, if we're going to quickly touch on the compression within an apex move or apex of a falling wedge, let's talk about gamma structure, and let's talk about volatility on what's called vol on vol, volatility on the IV or implied move of, or sorry, implied volatility of the options. What does it matter what time frames that you look at this? Yeah, just don't look at it on anything less than the 5. Okay. Anything less than the 5 minute, do not do this. It's just stupid, to be honest with you. I don't think it's relevant at all. Yeah, 30 seconds. Yeah, you could do 30 seconds if you want, but not the 1 minute. All right, so let's talk about compression within a falling wedge. Okay. Okay. Pops up, comes down, then it starts to coil. As it gets into here, you can see one of two things. That is likely, highly likely, right? Drop down to where? The tip, the level of the tip of it. Fake breakdown. Boom, boom, IHS, right? And then rip across the neckline. Boom, right? Or, see this. You can see that. You can see this. So you want to be aware of the different situations that can happen. It could be a false break and then flush down, right? So it doesn't this situation does not happen very often. Very rare, but it does happen, especially on SPX. It does happen. You'll see this. I'll see falling wedges. I'll see them start to break, and then people along it, and then I'll see it flush back through. So you got to be mindful. On the higher time frames, there's more strength to support the actual breakout to the upside to the FV, which is the center line of the falling wedge. This works in the rising wedges too, right? It's just literally the same thing, just reverse. So here's your rising wedge. Right? And then the breakdown, same thing. It's just going to be like this. Up. Then it retests it and fucking dumps. It's pretty cool stuff. Anybody ever heard of this stuff before? Before I've talked about this? Outside of this room, has anybody heard of this? That's good. This is all it is, you guys, too. It's math. That's good. I appreciate that. This is why I started the room, is to like teach people these types of things and help people have low risk, high reward trades, right? We're not going to be perfect. Nobody's 100%. Okay. But there is a reason why I'm hitting over 85 to 90% on the swings. It's not a secret. I teach you guys it all the time, right? Day trading is a little more difficult because we're fucking around with 0 DTE. We're messing with the market makers, the volatility, the vol on the IV of the option chain has a huge effect on how the market makers de-risk and leverage the options and fuck around with it. So you get false breakouts, false breakdowns, wick there, wick there. So 0 DTE trading is difficult, or weekly trades are a little more challenging. So, typically most great traders are running like, 50, 60% hits, right? But they're managing the risk so well that their losses are small. And you look at this type of the room that we have here, and that's the point. It's, we know we're going to hit over 60% of our trades. We know that. It's statistically proven, right? Since the room's been open, we've been averaging well over that. But if we have a bad week or something, right, or a bad session, we know we'll probably hit half, right? And if we hit half of our trades, let's say we take, 10 trades in 2 days, right? Or 10 trades in the week, whatever, or over the course of a month, it doesn't matter. But if you take those trades and you're like, okay, there's no risk on them because I'm trading them for a day or two swing, or I'm intraday trading them. If you know that you are minimizing your risk to 20% loss and sizing properly, like you're not going 100%. Say, for example, your typical trade size is $3,000, right? Well, you'd never want to go in $3,000 right out of the gates, right? Never, ever, ever. You want to scale in, right? So if I know I have an FV here setting up and it's coming down, I'm watching it. And once I get 3 taps, 1 tap, 2 taps, and a 3rd tap, now I'm looking at calls immediately. If I miss this tap to get in calls, I'm waiting for the break and retest to get calls. That's what I'm looking for. But what's most important is when that retest happens or I get in, at this point, I'm looking to make sure I size properly. So here, maybe a tenth of my position, right? So maybe I like to do 3,000. Okay. And then so in this position right here, I load $300. You're like, well, dude, you're putting in $3,000. No, this is how you size in properly. Because what if I alert calls here? Okay. It goes through, it breaks through. Right? Then your risk is only 300 and you could have stopped out at a $20, 20% loss, which is $60. However, let's say if the trade does start to work and you get in $300, now it pops up, you're still holding. Now you're up, now it's worth 400. You made $100, right? But you're looking to size in, right? And then it comes down, right? Now you're down from 300 to 200, right? You're down 25%, right, on this trade. Then you buy again, right? Now what you do is you load 1,000, right? Now you're in a little over 1/3 position right here. And your average went from, let's say you got in here at $1. Okay. And here you load $1,000. So now you have 10, you have roughly, let's just call it, 15 contracts, right? At 1,000, and you got invested into it about $1,200 total because this one dropped down, right? So you're in roughly for 1,000 for 12 or 12, 15 calls for about $1,200 here. Now let's just say it breaks out, but it doesn't even retest. It doesn't do this. So it breaks out. It doesn't do this, right? It breaks out and just fucking goes. Well, great. Now you sell at the FV. 70% of your position, because this type of a move, you'll make 50% on that easy every day of the week. So now your $1,200 goes to, you make 50% on that money. So you make $600. Great trade. You lock in 70%. Okay, so 70% of $600 is what's that? I don't know, like $450 roughly, right? And then you leave your runners, right? And then what happens? Let's say then it breaks out and then it comes down and rugs everybody, and you stop out on your runners because you have your stops at break even, right? Because by the time this comes back down, the theta and the move on this is gonna make it cheaper. Now it comes down. Okay, you made a little bit of money on the move up. Great trade. It comes down and it retests the apex of the triangle, or comes close and it just back tests this trend line. Now these same contracts here are 0.7. Okay. Now what you do is you take all your profits that you made and you buy a starter position in this. So you buy 8 contracts for $600, right? $50, whatever it is, right? It starts to hold. And now the momentum of the stock and that trade starts to move up, right? It starts to move up. Well, you don't have to just hold. Now you're like, oh, it's holding. Now you say, okay, as long as it holds this previous low here at the move up. This is how you trade it. Then the fucker starts to go, stair steps, and now you're like, well, it already tested the FV. I will trim half my position here. So you trim half now, okay? And if it doesn't break, then I'll cut the whole position and make great money. So now as it starts to shoot back up, these contracts that you bought at 7.0, or sorry, it's at 0.70, are now a double, right? You make 100% because this move crushed the contracts, and then you get the same move back out. So now you make 100% on that money. At 1.4, you had low risk because you used profits to get in. You saw it hold, then you sized in and started to load as it starts to move into the strength of the move, and you know it's coming out of a distribution into an accumulation. And once it breaks the FV, now you're riding to this target, the top of the triangle. Now your contracts are worth 300 a piece, and you made a fucking great trade, and you cleaned this thing up two times with minimal risk, right? You see how you guys understand how that is. So it's a delicate thing to be like, oh well, the alert came in at 1.5. I mean, how many times can you get somebody to be perfect on alerts? Not even Vince. SPX God is perfect. He's buying off support and resistance of SPX, but that doesn't make it perfect, right? It doesn't. Because they can break the floor of the contracts, right? If they break the floor, you can see a little bit lower move, right? And then where does the next floor become? Does it become at 0.90, or do they break the floor and then now 0.5 becomes the floor? And then they start to build structure off this. Okay. So you have two options. You have a few options when you're looking for entries. You have trend line and structure to define your risk. Trend line and structure can define your risk, and then also contract premiums. We teach that a lot in here. Where's the support and the resistance on the contracts? So let's take a look at contracts now. This is all about entries. I'm gonna switch my screen over to my my Webull. Oh, excuse me. So one thing I do want to say is with SMCI, the fair value area of this breakout is roughly $77. Okay. So now let's talk about options. This is the February $50 call. Actually, you know what? Let's do something different. Let's go to March because we're going to want to get in these. OG and these $50 and $70, $60 calls. OG, guess what? Oh, he's not. There are two. There, so that was a double, more than a double that we got there. All right, so let's do this. Yeah, so here's the contracts, the $60 calls that you and I were in. And now let's talk about how do we find support and resistance. Okay, so what we do is we take up, if we're looking at a larger time frame, right? So you know, some the newer people like Nova King might be like, "What? Fucking support and resistance on options? Yeah, this shit works, bro. It works great." So there's a floor there, a recent floor off 70 cents. Is it 70? What? Why does that say that? That's weird. The low, it says on that day, yeah, 73 cents, my bad. Yeah, so there's it there, 73 cents. Um, all right, so now we have a support there. And we're on the daily here, right? And then I'm going to grab another one, grab another trend line, and I'm going to say, this looks pretty good right here, $1.57. Okay, and then we're going to take a little bit higher up. This is clearly resistance on these contracts. Clear. Resist, support, 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 now resistance, 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 right? We have it all the way up to $7, right? And then we have one here too. Right? And then now let's go to the hourly. Now we go down to the hourly. Whoops. So now we're going to look at this. And like, you know, we talk about, here, let's just go here. So here's your support there, there. All-time high, recent all-time high is up there. Support's right there. All right. So then what I'm going to do is this. I'm going to scroll back. Let's see where we go above us. Okay, so really, if we break this high of this contract, it could really move fast. Really move fast. Because there's not a lot of supply here. Okay, now let's talk about entries within contracts, right? And option contracts and how to time these entries. Down here at 44 cents. All right. So how do we time entries? Right. Now we talked about entries on stocks based on structure. We talked about entries um, uh, on the wick and how to enter in on the wick of price action on the 15-minute, right? So now let's talk about entries on the contract chart. And for those that are like, man, Jesus, like, why do we care about entries so much? Entries are everything. Entries are what makes and breaks a trader. You could be a terrible trader, but if you have good entries, you can be profitable and make a lot of money. You could be a terrible reader of price action, but if you have good entry, anything, but if you have good entries, you can make a lot of money and be consistent. Okay. And so this is what you want to focus on. Okay. Entries. How to get, and so when I throw an alert out there, so I'll put it to you this way. My swing trade alerts on entries are really fucking good. But you have to realize the swing trade is not meant to go 100, 200% that day. It most likely won't. It usually takes, I design my system and my swing trades are designed to go, 100% or more within 2 to 4 days maximum. And I'm pretty good at it. Like, I'd say pretty darn good at it. Like, for example, one of our swings we loaded for March on Wednesday. And listen to this. So the contracts got bought at 1.05, so $105 for one contract on Wednesday for CRISPR. Okay, I'll pull up the chart quickly. Is $50 calls. Okay. So we took our entry. Right here. 270 calls were bought. We didn't alert this because of that. That was somebody. Someone coincidentally bought those at the same time. Weird, right? So this was where the alert came out. I didn't even look at the contract chart. I didn't need to. Because I knew without a doubt this thing to fucking break out hard. Okay. We entered in right. It was Wednesday. So these contracts were at 1.05 when we entered on the alert. You can check in the swing channel if you want. So the alert came out on Wednesday, and what happened? Thursday, they went down to 0.87. That was a low, 0.89. Look at this. Then the next day, it gapped up and they went 400%. Right? 400%. That's pretty crazy. Right? That's pretty wild. And we have a month on these babies. How did I know this was going to do this? Right? Well, now let's go back. This is why entries are. But actually, before I go into that, but here's the thing. I'm going to talk about your entries and the swings and why it's important not to get shooken out. Okay? And this will all tie in. So we get in at 1.04 or 5. The next day, you're like, oh my God, I'm down 20%. It's okay as long as you sized appropriately. Maybe you bought 10 for $1,000. Well, you should buy another 10 the next day. Or you don't have to. Because if you do buy 10, that's 1/3 size in, right? You're down 20%. You're down $200. Okay, well, what's happening? Nothing. Nothing happened, right? Because let's take a look at the chart. Okay. Let's take a look at the chart. Let's go to CRISPR because we're going to be trading this week again. Okay. I still have my position. I'm not getting out. Okay. Okay, here's crisp. So crispy, crispy, crispy. Okay. So I knew without a doubt this effort was going to break out. Can anybody tell me why I knew this was going to break? Quick. I mean, I literally called a 400% trade in 2 days with over a month of time. And you guys know I've done this probably like 30 or 40 times on swings this year. Wow, well, why? Why? Look what I drew. Anybody see what I drew? Can anybody see what I drew? All the taps on support. No. It's okay. I want open discussion. You can come on voice too if you want to. Descending? What's that mean? Oh, descending triangle? It wasn't technically actually a descending triangle. Yeah, you could say it's a wedge. Yep. Yes, trading range. Good job, Green. So the trading range, this is key. Okay, so trading range, it was trading in. I've been watching this thing like a lot. So, people are probably like, well, how the fuck did he find this stupid stock? Like how the hell does he come up with this shit? Right? I mean, it's kind of like a normal thing to say, right? Like, what the hell is he smoking? Like, how the hell does he find these things? Right? It's because I'm watching this stuff. Yeah, you would have drawn a box for sure. Yep. So now we're going to get into why or how the breakout strategy works. Not only my breakout strategy, look, I know everybody wants to, play SPX and, that's great. It's fucking awesome. I love SPX. But you know what? How, how are you going to trade SPX when fucking price does this shit? you know? Or it does this. It just, you're going to hold through that? You're going to buy at the money calls? Are you going to buy at the money calls here and just sit and pay all that money and just sit and wait and wait and wait and wait? Or are you going to buy the same thing here? Yeah, this was a solid move. That would have paid really good. But you're gonna are you gonna catch that top on that overextension and catch puts every single time? No, no, you're not. When we catch big legs on SPX, fuck yeah, we do. We absolutely do, right? Looking back on last the Friday, is it Thursday 15th? Yeah, we caught this move right here. It broke. We took puts 400 or 500% down, sold. Right? That's a great trade. That's a leg. That's a nice leg to trade. A distribution leg, right? However, that's one great trade, right? And you know, SPX, your entries have got to be great. Otherwise, you're going to get wicked out, stopped out. Your nerves have got to be fantastic, right? I mean, and that's just the way it is. You all know this. But the reason why I'm consistent for the last 9, 10 years is because of this strategy, my swing strategy, because it's all built and designed to catch a $3 to $12 move, $3 to $12 move in less than 4 to 5 days. So, how does it work? There's a couple things. Okay. Not only did this is like kind of icing on the cake, but they smashed earnings, and I knew it. So I'm like, all right, this is going to get fucking loaded up. So this is going to have a lot of continuation. Okay. Now here's the deal. This is the trading range right here. You have the upper resistance. Okay. And then I could draw another one right here. Okay. So this is the trading range. Support, right? And how do I know that these are the spots? Okay. So you want to be able to identify the trading range. Okay. You can see that this move right here, this PSY, is right here. Right? Very simple. Bear flag. And then breaks down. Same thing. Bear flag, breaks down. Boom. And it has an aggressive. The key point is look at these candles. This is aggressive selling. And then what does it do? It bounces hard. What does this do? Bounces hard. Right? This schematic doesn't have to be perfect to setting up. It just has to be, it has to make sense and be very close to perfect, right? Doesn't have to be perfect, right? Because the schematics can change, right? As you can see with Vince and Volmageddon. Like, I don't know if you guys have noticed, but like, he was really bearish, and then all of a sudden he'll adjust his schematics as he should because he needed to be bullish, right? Right? So, like I said last week, not this past week, but the previous week, I said, man, what's your bullish case? He said, I have none. I said, okay, well, mine is the volatility crush, and they're going to squeeze the fuck out of the market, right? And he had to adjust his thing, which is fine. This is part of the game, right? We're not always perfect, but you have to understand when you define your trading ranges, that's gold. It's huge. Because now you know where the hell to get the hell out up in here if you want to trade it. Or you wait, which is what I like to do. I wait. And then I look at my EMAs. Voila. The good old EMAs, the 13, the 21, and the 200 on the 1 hour. Right? So what's happening with the EMAs? First part of the strategy. Okay. We know that you don't even have to know structure. Look at this. So downtrend, right? EMAs are down. Don't buy calls. Don't buy them. Now they're flattening and they're starting to curl up. The 200 is starting to move up. It's flat. Now that's when you want to pay attention to the swing opportunity, right? And you define your risk. This was a spot of risk. Here, this trend line was a big spot. And on the larger time frame, There's more. You have another spot of risk here, which is damn near close to where they wicked it, right? On the big move up, right? So look at how high the stock was. There was no splits, you guys. No splits, and this thing was over 220. Yeah, this thing's gonna fucking go crazy. This is a good long-term hold for a portfolio. So now we go back to the 1 hour. All right. And we're sitting here like, okay, EMAs are flattening out. I've got my risk defined, right? And I know where the bottom of the trading range is. It's down here, right? And then I draw this anchor on this trend line right here when I see this plunge down and pop, right? Once it plunged down and popped, I knew. That's when I knew we needed to get in calls. Why? Why do you think that? Because look what's happening, right? What's happening? Compression. Here's your tube of toothpaste. Didn't the plunge down and pop also happen on the 13th? No, it didn't. Uh-uh. So they had earnings on the 11th, right? No. The plunge was on the 11th in pre-market, right? So before market open. Earnings was after hours. When was it? Yeah, it was after hours on the 11th. So they set the low, right, on the 11th in the pre-market. Then what happened is this. It moved up Wednesday, okay? It moved up, and I caught it moving up. I didn't buy, but then I alerted it here. I alerted it up here because I knew this thing was going to break out because this spot right here, this little plunge that you're talking about, it's a spring. It's a spring. And I knew looking at my trading range that this whole thing was fully accumulated. If you look at the buy volume, right? And let's take a look on the 4 hour. It's probably a little easier. No, let's look at the daily. It'd probably be better, even better. Yeah, the daily's way better. Okay. So you can see that there wasn't a lot of buying, right? There's a little bit. Like if you look at the aggregate buy versus sell, it's probably 50-50 leaning buy side in this range, right? But once the earnings came out and they beat by 300% on revenue, and then they beat this, okay, now I know that this was accumulation. Number one, I know for a fact, right? And also, I'm looking at this. Look at this wick. That is a motherfucker wick. This wick on this daily candle tells the whole story. That's a big deal. It broke the trading range and boom, that's a BST, right? Breaks down, holds, and then it comes back up. Tests the top of the range, comes down, and what's happening here? What's this RSI? It's a little cooked. So now let's go back to the 4 hour. Okay, so obviously we know the 1 hour EMAs are flat and curling up, right? Let's take a look at the 1 hour quick. Sorry. All right, and what happened here was I noticed the wick, and then I was able to draw my structure, right? This trend line down here, this trend line, and most importantly, as it started to push up, it was aggressive Wednesday. Like this move up was no joke. I didn't catch the move up. I alerted it when it came back in and tested this range. So then the next day, it popped up and then it came down. I had a member in here say, hey, oh my God, my calls are down on the swing a little. I said, hold. Oh. I was like, just hold, okay? It's gonna go. It's fine, I got him. I made it. So I was like, it's gonna hold, don't worry. Why did I know it was gonna hold? Because right now I knew that this was flagging out. Whoops. This is flagging out, right? It's up, 1, 2, 3. And as long as it held this wick at 41.84, there's zero reason to get in or to get out. Zero. Because it was turning this into support before a big breakout. And then what happened? I knew it was going to break because it's bull flagging out here. The bull flag. 1, 2, 3, 4. See ya. I almost got weeklies on this move. And I had a member say, oh my God, my stuff's down. I'm going to hold. And then the next day they made close to 300% on that move with a March call. And that's how this trade set up. And a lot of it has to do with the preparation ahead of the move, identifying the trading range. Okay. Identifying this trading range. Here's the top of the trading range, the bottom, and here's the very peak of the trading range. This is the area that had to break, right? So why was it that area? Well, look at the coincidence of this. This broke. Look where they closed the 4-hour candle, right on it. Isn't that wild? Pretty crazy, right? So here you have the range was set up, the EMAs were set up, the volume was increasing after the earnings. That was good, okay? And they put a nice low in. We were able to identify that this was the structure right here that had to break, right? And so it did. It flagged out early and it broke, right? Now, if let's say it breaks down, right, and starts to break, well, we have our risk defined here, 41.80. If it breaks that, then you get out. And then maybe it goes like this and then goes, right? Either way, this was a top tier setup for a swing, regardless, top tier. And then you have, now we're in the trade, right? So we're having runners on this baby. And I have so what I like to do is obviously once it moves up, it explodes, I sell pretty much 80 to 90% of my calls. I leave 1 or 2 left, right? And then I just let them go because I want to see what happens. Because if it keeps going, great, right? But I want to see. To me, we have a couple great things that happen. Number 1, they broke the downtrend. Number 2, okay, we're coming out of a clear accumulation cycle, right? And number 4, they have great earnings. And number 5, the EMAs on the 4-hour have crossed over the 200. Vertical with pressure. It's a big deal. I expect this to happen next week. Come down to there or to here. And then that's what I want to see. Hopefully. I'm praying for that, to be honest with you. I'm gonna throw an alert here. So that 47. Yeah, exactly. So, and then it goes back to what RS was saying to me and complimenting me about was, man, you just beat the shit out of China constantly, right? And this is how I'm doing it, right? So I know what's going to happen. And then to another side of it, to the very simple side of breakouts, I posted it in my channel. I'll take a look. I'll repost it in the chat again. So you guys can save it or have it. Right? So coming back to simple, there's one line, there's two line, right? Oops, shoot, sorry. All right, so there's one line, there's two line. Okay, so if you think about it, this is a support, or it could be a wedge, right? It could be, a rise, or this right there, right? Or it could be this. Rising wedge or falling wedge. Now check this out. Right? That's strong. That's a strong move. Here we go. Now, all of a sudden, we moved up. Actually, let me do this. This would be sick. Watch this. Now price was moving strong off this. And then it happens. Then it comes down. Comes back up. Comes down. And dumps. That's weak, right? It's strong. It's strong, right? It goes up, comes underneath, dips under, shoots up, and shoots up, right? And then this would be weak price action, a fake breakout, or a weak breakout, right? It'd be shoots up, comes down, there, comes back down, and then falls. And what's that? Falling wedge. Coming out of a rising wedge. Strength into weakness, right? Pretty cool. So the basic is this. This is strong. Price action. Right? That's very strong. Very strong. It's this momentum. And this is weak price action. Up. Down. Right? So we want to understand the simplicity of the price action. Now I'm going to show you something on the indexes. Okay. Whoops. Okay, so here's the index. Now let's look at this same thing. Pattern I showed you, right? Strong, strong, weak. Right? Into support. Strong, weak now. You guys see it? It's pretty crazy. right? And if you think about it, it's like, so how does this help? How is this actionable? Well, when you're in a trade, just zoom out a little bit and try to figure out and say to yourself, is this strong price action? So when you're trading, just keep it simple too and say, ask yourself, what kind of price action am I in? Right? This is the 5. You could look at the 15 too, right? Same thing. What is this? This is strong, right? So if you get calls and you know that here this was weak price action, well, eventually the weak price action is going to turn into strong, right? Because if we look at the 4-hour, what's happening on the 4-hour? That's pretty fucking bullish, right? Right. Well, this whole thing is not like it's gone from a weak, right? Strong, weak, strong, weak, and now it's strengthening. It's strengthening because what's happened? Structure is breaking to the upside, right? However, this is a big spot, right? And so if we look at the 4-hour, yeah, I'd love to see a flush Monday or Tuesday. That'd be great. But they're not going to flush it if this doesn't break. They need 80, 60, 86 or 60, 85 to break, right? And right now, this 4-hour is in a flag. It's not weak. This is technically not weak. They've broken us out of the downtrend and they're building a flag in on it, right? So if so, what are we going to do? We're going to define our risk on Tuesday, and we'll see if they do dip it. Oh, dude, it's fine. Don't even worry about it. It happens all the time. It doesn't even matter. So if it breaks out, so we already have a breakout, and they're flagging it right underneath the all-time high. Right? So we want to think, okay, what are the scenarios that can happen? Okay, so we can have this. Let's just make this really thick. That can happen, and they could have this. It's a broadening wedge, right? They could walk it down and then break it out, right? However, if we see price action, we know, okay, the structure of this is an up, down, up, down. We really need to see a breakout on Tuesday or Monday. It needs to go. It has to go. Because if it doesn't go and it continues to weaken and starts to get under here, we know we go short. And we define our risk and we can go short because we can see something come down in here and then rip and squeeze. So like if we look at the overall structure of how the market is setting up, there's a couple good scenarios that we want to be aware of. Okay, it's a little better. This is it right here. This is the structure we want to be aware of. We know for a fact this is a tilted ascending triangle. Ascending triangle here. Very clear. Right? You can see that. And what has happened? Compression. Right? However, watch this. What happens if this happens? right? What did we talk about in the beginning? Golden pockets right here. What did we talk about the holiday? This would be good. This would be so cool to see this set up because then what would actually happen is this trend line would have to shift to here. And then it would be a perfect ascending triangle on the 4 hour. They're like we'd be textbook. Textbook. We have to keep that down there. Right? And what we can do is take this and draw it right here. Right? And so let me extend this up and out. There's that. So then we can take this one and turn it a little bit smaller. There. So we have a couple scenarios now, and now we are fully prepared for the market. Fully prepared. We understand China, we understand the dollar, we understand our breakouts, we understand how to get better entries, most importantly, how we understand how to enter on wicks. Like, for example, if this comes down, right? And we miss this flush and then it comes up and retests this trend line, what are we going to be doing? We're going to be entering on the wick as it drives up into that resistance and puts to catch the bigger move down, right? And we have an idea if they do want to break us out and shoot us up, we're going to be entering calls on the retest of all-time high and then go. As the candle is pushing down, we're going to grab at the base of the candle as the candle slows down, and we're going to ride the wick up and then ride structure and go. Now we're becoming elite traders as a team, as a group, as a community, and we're moving in the same direction. We're understanding that there's multiple probabilities and situations that can happen all the fucking time. We understand how we identify high quality swing trade setups and how we get in and how we need to be patient based on structure as long as it's holding, and understand where we are at in the bigger picture of a swing trade. And if you have a small account, what do you want to do? Do you want to just keep taking, take the 20-30% like OG and I are doing on some of these swings, or 100% on, or 200-300% on a swing trade gap up like the Babas and the crispers or whatever it may be, right? And have low risk and build your account that way? Or do you want to, focus on SPX only and have higher risk, higher reward trades, right? So identifying where you want to do, maybe you want to have a combo. Maybe you have a larger account and you want to do a combo. Maybe you have, 30% of your port designated for swings, and then you take another 30% of the port and you focus on swing trading, on day trading, right? And so as long as you're defining your risk and focusing on improving your entries, and you're focused on having multiple probabilities, understanding structure and learning, you're gonna be great. You're gonna be a great trader. You're gonna profit consistently. You're gonna be impatient with your losers, and you're gonna learn how to cut them when they don't fucking move. On a 0 DTE day or a 0 DTE trade, you got to understand, like, your time is limited. Your time is fucking limited. 0 DTE. You better get the fucking move, right? And you better get it within a reasonable time, especially if you have out of the money contracts. So, and as time kind of compresses into that hour, the power hour, the noon changes, the volatility on the contracts increases, and then you got to be that much more accurate, and you have to be that much less greedy, right? I mean, great. You know what? We catch a 900% trade on 0 DTE or 400 or 500%. That's awesome. But the reality is, it doesn't happen all the time. And if we get a volatility kick, it can happen a lot. right? It can happen a lot. So, anybody have any questions on the things that we covered today? I'm going to go over one last thing before I end this piece. Did you guys like this EDU session? It's a little different than my typical, but they're all pretty solid. Yeah, so fair value is the center line of a falling wedge or a rising wedge. So meaning like this. Here, I'll show you. I'll just show you really quick. It's very, very simple. So FV is this. Hang on. Get my logo. Okay. All right. So FV. Let's do this. This would be very, very simple for you. Here's the top. Here's the bottom. Right? Here's the top. And here's the bottom. Right? So the white, let's do this here. Let's take this up. Let's take this trade, this one up, because I don't want to just confuse you here. Keep this very simple. Simplicity is the genius in all greatness. Simplicity is the genius in all greats. You look at Tiger Woods, you look at anybody who's great at anything and consistent, simplicity is the backbone of that. I would argue that to the day I die. Okay, so you want to keep my goal for every day in the room, EDU, whatnot, is to make the complicated simple. Because the markets, we the markets are the market, right? And at the end of the day, we want to be keeping everything very simple, and we want to understand how we can make money very consistently and lose very little, right? So FV. Okay. All right. So if we're here at, say this is the top, and this would be the middle. So this, as this thing comes up, comes down, this would be the FV. The center point is the fair value of the top of the apex and the bottom of the first touch. Right? So then let's take a look at the other side. Where's the FV? Right here. Here's the top. Here's the bottom. There's the middle. Right there. Let's turn that red. So this would be the FV right here. That's the first target you can target on it, on the breakout of a falling or a rising wedge, right? And as you can see, it's weak price action turning into strong price action. Strong price action turning into weak price action. Both are getting compressed in a different way within a triangle, and both are reacting off the apexes. Now, one thing I want to talk about lastly about apexes and FVs is this. This happened on Tesla, and it was like an explosion of money hitting our portfolios. And it was fucking sick. I'm never going to forget this trade because it was so good. And I knew it was coming, and I saw it coming a mile away. So where was this? Oh yeah, I gotta go to the 30 minute. Yeah. Yep. That's it. Let me show you this one. Please. This is the cool part about understanding triangles and FVs and all this shit. How I remember this shit, I don't know. So I had this drawn, this triangle drawn right here. This was a setup that was dirty, really dirty, and nobody in the entire market timed this better than I did. No fucking way. I bottom ticked the contracts and caught the move right before this massive fucking banger. Fucking crazy. So, how did I know this was going to happen? So, was watching this setup, right? This, and they did a fake breakdown underneath, held it, reclaimed it, and then this Friday, they gapped us down. Okay, and I was just keeping an eye on it, and I'm like, well, what the heck? So I'm like, okay, well, this is weird. Then they popped it up, and I'm like, we're at the FV. Oh my God. Sorry, not the FE. We're at the apex of the triangle. This is the apex. And remember what I said about the apex of a triangle? Gets the most explosive fucking moves. Right? So we didn't take calls here. And we didn't take calls here. We took calls right here on this last piece. How did I know? Actually, on Tesla. And I was watching it. And I'm like, this thing's ready to go. And I'm like looking at it and I'm like, okay, it's time to get in because I'm watching it base and watching it flag out. And I'm like, it's really close. And I was watching it on the 15 and the hourly. Shit, where is it at? Yeah, there it is. So I was watching it on the hourly and then I was watching it on the 15. And as soon as I saw this setup right here off the FV and I saw it come down, pop up, and hold, we got in calls right here, risking this, which was what? It was off 92. Roughly, we got in 92.50 to 93, and I was risking $1, like less than $1 of risk. That's not that big of a deal. Anyways, the explosion. Look at this move. We caught the whole move. 92.50 right into close. And that closed at 406. It's a 13-point move in less than 30 minutes, 45 minutes. That's the power of the apex of a triangle. This shit happens. Whew, man, right? And then I could sit here and go into the RSI dynamics or how it all kind of fit in, but the big point is there you go. And you see how this happened? This one happened was different. How it was different was it went out of the triangle, came back to the apex, and then ripped. As opposed to doing this and then ripping, right? Same shit. Why would it be different? Well, there's a lot of reasons why it could be different. It could have been different. Is because maybe the institutions or the big boys, they didn't want to buy here. Maybe they were waiting till this time frame to pop it. But the reaction happened there anyways. That's the point. It doesn't matter because it all fits. So, anyways, that's the deal. Anybody have any other questions about what we're doing, what we're looking at? Tesla. I like Tesla. This is going to be actually a short we're going to look at. Maybe off 75. Excuse me. I'm going to throw a trend line right there, actually, or support. This is going to be an area for me. I want to short this thing off this. So we could long it up there, but the juicier part is going to be a short because this is going to be a nice short. It should run all the way down to 300. So we could get some out of the money calls. But anybody have any questions about today? If you guys want me to cover other things, like kind of topics like this or focus on more of this kind of stuff, I'm happy to do that. It's, you know, also, if you know anybody that you want to join the room, I'll give you a free month off the subscription if they pay for a month. So, hope this was helpful. I think Big Cat's gonna upload this later tonight or tomorrow morning for everybody. But yeah, we got a lot of good setups moving forward. I got my eyes on this stuff. This is a beautiful setup. This is a Nismo kind of type of trade. He loves these. I do too. I love these too. But he loves these too. He the breakout ride down. I call it riding the pine down the this triangle or this falling wedge, and then it's gonna go. We have earnings coming up too. Actually on my birthday. So. All right. Well, I hope you guys have a fantastic weekend, a great Saturday. Other than that, that's about it. So we got some fun stuff. We just trade the market and take what it gives us. And the last thing I'll say is, the more patient you are with your entries, and the more times you just let a trade go or wait for that great entry, the easier it is to make money because you're not settling for a you're not settling for just like a average entry, right? And it's okay just to take one trade a day, or if I put a bunch of alerts out, you don't have to take them. Just fuck it, it's okay. But if you see a swing trade, you're like, man, this is nice. Oh, I like this. You get a good entry, take it. So I'll just leave you guys with that stuff. And we're gonna have a great week. We're gonna have a great month of February. It's gonna be fucking awesome. All right. And no rush. Let's just enjoy the time. Enjoy getting good entries. Enjoy taking profit. And don't worry about, hey, I got these bills I need to pay. I need to get in this. I need to do this. No. Take the time frames out. Take the expectations away. Right? There's no rush. Like the less you rush, the more you'll get. Have you guys ever thought about like how funny it is in life when you try and try and try so hard and life pushes back, but the moment you say, fuck it, I'm just gonna enjoy myself and kick it, then it's like everything just kind of falls into place. Yeah, it's just that's the way shit is in life, and that's the way it will continue to be. So if you can build your mindset and build your trading in the same way and alignment, you're gonna see a lot more relaxation within your mind and body, and you'll see better performance, and you'll start to see things better, and you'll start to say, you know what, I'm going to take that money. I'm going to take that 30-40% and lock it in and look for the next one. And if you do 30-40%, 9 out of 10 times or 8 out of 10 times, you're gonna grow your account very consistently, and that's all we care about. That's it. And last thing I'll talk about is XOM and Oxy. These are going to be long-term swings. So for the larger accounts, feel free to DM me if you want. I'll tell you what to put in to get in. I just got my neighbor positioned on Friday for some leaps on Oxy, and also on some XOM trades too. XOM June 130s, June 120s are going to be good trades. They're going to just be a long-term hold, though. You got to just park the money and then leave it. So, other than that, have a great weekend, guys. Love you all, and rest up, relax. We're gonna have a fun week. All right, peace.